I would invest my first $500 like this in 2026. If I handed you $500 today, could you turn it into financial freedom? Most people think $500 isn't enough to invest. They think they need thousands of dollars before they can even start. That's exactly why most people never build wealth, because they're waiting for the perfect amount of money, the perfect stock price, or the perfect market condition. But what if I told you that's the wrong way to think? What if the real secret isn't how much money you start with? It's the habit you build from day one. In this video, I'm going to show you exactly how I would invest my first $500 if I were starting over today. No hype. No get-rich-quick promises. No turning $500 into $1 million overnight. Instead, I'm going to give you a simple blueprint that can help you build a real wealth portfolio one share at a time. And by the end of this video, you'll know exactly what to do with your first $500 and how to keep growing it year after year. Let's get into it. Section 1. The biggest mistake beginners make. Here's the biggest mistake beginners make. They become obsessed with stock prices. They're constantly asking, should I wait for a dip? Is this the perfect entry point? Should I buy now or later? But if you're just starting out, I don't want you focusing on any of that. I want you to focus on building the habit. Because the habit is what creates wealth, not the perfect entry price. Most people never become successful investors because they're waiting for the perfect moment. Successful investors focus on consistency. Section 2. Understanding your options. Before investing your $500, you need to understand the different ways you can invest. Option number 1. Individual stocks. These are companies you already know and use every day. Option number 2. ETFs. An ETF is a collection of stocks bundled together into one investment. Instead of buying one company, you're buying many companies at once. Option number 3. Index funds. These track major indexes like the S&P 500 or NASDAQ. Many long-term investors choose index funds because they provide diversification and simplicity. Option number 4. Fractional shares. This allows you to buy a portion of a stock instead of an entire share. No matter which option you choose, the goal remains the same: own quality assets and keep adding to them consistently. Section 3. Open the right brokerage account. Before you invest a single dollar, you need a brokerage account. Some popular options include Charles Schwab, Fidelity, a Trade, Robinhood. The most important thing is choosing a platform that's easy to use and allows you to invest consistently. Don't overthink this step. Pick one and get started. Section 4. Quality companies under $100 now. Let's talk about some companies that many investors watch because of their strong businesses. PayPal, Shopify, Walmart, Chipotle, Palantir. These are companies with recognizable brands and business models. The goal isn't to buy everything. The goal is to start building positions in quality businesses. For example, if Walmart is trading around $80, $90 per share, you might buy a few shares instead of putting all $500 into one stock. Always keep some cash available. You never want to be completely out of flexibility. Section 5. The real wealth formula. This is where most people get it wrong. They think investing is about finding the next stock that will explode. It's not. Wealth is built through consistency. Let's say you buy a few shares today. Then every week, every 2 weeks, or every month, you add more money. Maybe it's $25. Maybe it's $50. Maybe it's $100. The amount isn't important. The consistency is. That's what separates investors from spectators. Section 6. Build positions systematically. Here's a simple strategy. Pick 3 quality investments. Build your first position to 10 shares. Then work toward 15 shares. Then 20 shares. Then 25 shares. Instead of constantly jumping between different stocks, focus on strengthening the positions you already own. Over time, those positions become meaningful. and meaningful positions create meaningful wealth. Section 7. Use extra money to accelerate growth whenever you receive extra money. A bonus, a tax refund, a side hustle payment, a commission check. Consider investing a portion of it. Many successful investors use unexpected income to accelerate portfolio growth. This is how a small account begins to grow into something significant. Conclusion: remember, the goal isn't to start with $500. The goal is to never stop after the first $500. Focus on quality companies. Focus on consistency. Focus on building the habit. Because wealth isn't built in a day. It's built one share at a time. If you found this video helpful, make sure to like, subscribe, and comment below. If you were starting with $500 today, what would be the first investment you'd buy? I'll see you in the next video.